morning, this is Bob Mason from FX Empire and welcome to the daily crypto tech review of Bitcoin, EOS, Ethereum and Ripple's XRP. It is Monday the 13th of July. Jumping straight in, looking at the hourly candlesticks for Bitcoin against the dollar. Slightly bearish start to the day after yesterday's choppy session. Going to need to see Bitcoin avoid the pivot at 92.86 to support a run at the first major resistance level sitting at 93.98. Going to need to see support from the broader market to break out from yesterday's high that was at 93.68. Barring a broad-based crypto rally, that first major resistance level should cap in the upside. Fall through that pivot and we're going to see the first major support level sitting at 9,200 come into play. Barring an extended sell-off, should avoid sub 9,000s. We've got the second major support level sitting at 1993. If we look at the EMAs and the MACD bullish histograms widening, suggesting a possible breakout on the day. And we're also seeing a narrowing and a possible crossover of the 50 EMA through the 100, suggestive of a breakout. So avoiding that pivot will be key this morning. Moving across to the daily candlesticks and the MACD and the trend analysis, Bitcoin struggling to break out from 9,500s. So going to need to breakout through to 9795, which is the first key resistance level, to then support a run at 10,000s and 10,398. The second key resistance level that would support that near-term bullish trend. Breakdown through the pivot and through the 23.6% fib would bring 8855s into play. Breakdown through there to 8620s and we're looking at a bullish trend reversal. So we continue to see Bitcoin needing to break out from 9,400 through to 9,500 to support that bullish trend. Continued resistance could see that pullback. Jumping across to EOS against the dollar. Mixed start to the day. Going to need to see EOS move back through the pivot at 61.80 to support a run at its first major resistance level sitting at 66.81. Going to need to be a broad-based crypto rally to support a breakout from yesterday's high that was at 66.46. Failure to break back through the pivot's going to bring that first major support level that's sitting at 57.14 into play. Barring extended sell-off, should avoid sub 250s. Got the second major support level sitting at 52.13. We're looking at the MACDs and the moving averages. We've got a slight widening of the 50 versus the 100 and the 200, and we've got a widening of the histograms on the bullish trend, suggesting a bullish day ahead. So a move through that pivot early will be key. Looking at the trend analysis, EOS is also struggling to break out. Going to need to see a move through to 90s, which is the first key resistance level, to then support a breakout through 311s to maintain the bullish trend. Breakdown through to sub 250s would then bring this key support level at 219 into play. Breakdown through 219s and then you got a bullish trend reversal. So move through the pivot and a breakout through to 270s would then give EOS a run at 290. Moving across to Ethereum against dollar in the hourly. Bearish start to the day after yesterday's late rebound. Going to need to see Ethereum avoid the pivot at 241 to support a run at the first major resistance level sitting at 245.64. Expect plenty of resistance at 245. I'm going to need to see support from the broader market to break out from yesterday's high through to 244s. Fall through the pivot would bring the first major support level sitting at 238.25 into play. Barring extended sell-off, should avoid sub 230s. Got the second major support level sitting at 233.68. Looking at the MACD, pointing to a bullish day ahead, so avoiding a fall through that pivot will be key. Also seeing the 50 moving average breaking away from the 100 and the 200, also pointing to a possible breakout. So look out for a move through to 244s that could signal quite a bullish day ahead. Looking at the daily candlestick and the trend analysis for Ethereum against the dollar, continues to fail to break out from 250s. Going to need to move through the first key resistance level at 253s to support a move through the 23.6% fib at 257s. That would support a bullish trend. Momentum maintained. For a breakdown through 230s, and then we're going to see that first key support level at 215s that would then bring sub 200s and then 176 into play. Fall through 176, and that's a bullish trend reversal. So key on the day is a breakout from today's first major resistance level sitting at 245 to support a run back through to 250s and the 23.6% fib. Moving across to Ripple's XRP against the dollar and the hourly candlestick and MACD. Mixed start to the day. Going to need to see Ripple's XRP break back through the pivot at 2014. Support a run at its first major resistance level sitting at 2047. Going to need to see support from the broader market to break out from yesterday's high, 2447. So barring an extended crypto rally, should see that first major resistance limit any upside. Phase break back through the pivot is going to bring the first major support level sitting at 1983 into play. Should see Ripple's XRP avoid the second major support level sitting at 1950. Looking at MACD, pointing to a bullish day ahead. We've got the bullish crossover and the widening of the histograms, and we're also seeing the 50-day EMA begin to widen against the 100 and the 200. So a move through that pivot will be key. Finally, looking at the daily candlesticks and the trend analysis, going to need to see a break back through to 221 levels and a run at the first key resistance level sitting at 2152 to support that near-term bullish trend. Ultimately, Ripple's XRP is going to need to break out from 2357s to maintain that bullish trend. Pull back through the day's support levels to sub 1750s, and then you got this first major support level sitting at 1690. Break down through there and you got a bullish trend reversal. So move back through the pivot and taking a run back through to 21s remains key to maintain that bullish trend. For more tech analysis and news on the cryptos, do visit fxempire.com. Thanks very much.